So good afternoon and thank you for joining us today for the Eagle Mountain Mining Investor Webinar. My name is Jane Morgan and today we are joined by EM2's CEO, Tim Mason, and Chief Geologist, Fabio Vergara. We'll be providing a company update and discussing yesterday's announcement on the update of the JORC Mineral Resource Estimate for the Oracle Ridge Copper Project. To ask a question throughout the presentation, please use the Q&A function at the bottom of the screen. Tim, I'll hand over to you.
No worries. Thanks very much, Jane, and thanks everybody who's tuning in. Today I want to give you an update on our announcement which we put out yesterday. That will really be the key focus of what we're discussing, where we saw an increase in our JORC resource at our Oracle Ridge project in Arizona, 36% more contained copper in resource. So quite a significant update. Fabio, if you just want to jump through to couple more slides. So what we're going to go through will be, what we started off with, where we are now, and what is the vision, and why is this significant with where we're going forwards in the future. So on to the next slide, Fabio. So for those of you who don't know much about us, so the Oracle Ridge project's in Arizona. It's really sort of our flagship project, where we saw a lot of potential to grow our mineral resource, both extensions to the existing resource, but then we also saw there's the big opportunity around Arizona where you get these big major systems. We're in the right age rocks, similar to a lot of the other major projects around us. So there's that blue sky scale potential is very, very significant in our view. But what we're doing and what we've updated yesterday is expansion of the existing resource. So Fabio will go through a bit later on about where that's actually occurred and where we've put in the initial holes. So what we've seen, the old resource was at 12 million tonnes, and it's now gone up to, on a like-for-like basis, of 17 million tonnes at a similar grade. It was 1.5, it's 1.48 now, so a tiny reduction in the copper grade. And that's overall a big, significantly improved contained metal. Now, what you can see on the screen there is the two different cutoffs. So at a 1% cutoff, which is what we did the last resource at, it's at 17 million tonnes. But if you drop it to 0.8% cutoff, so a slightly smaller reduction in the cutoff, it goes up to 26 million tonnes. So that's quite a significant increase. Now, why have we put that there? Well, it comes down to really doing the mining studies, and what is the right grade to be mining this? Is it to be better to be mining much larger tonnes? You can see the impact of reducing your cutoff there at a slightly lower grade. Look, that's all going to come down to the feasibility study. So there's a lot of optionality is what we see with this resource. And so hence that's what we've put up there. Now, this resource, we started off drilling and expanding the existing resource in September 2020. We started off quite slowly. We had one rig going. It was going for 20 days per month. And then more recently, we ramped up to 3 rigs. It was going full time, and the drills have been going fabulous. We've got Bort Longyear's been doing our drilling for us, and they've done a superb job. Now, this update had holes which finished around late November last year. Then we waited for the assays to come through, and then we've done the JORC estimation on the back of that. So there's a bit of time, obviously, to do it. But we've now been drilling at such a fast rate that we've drilled more holes since the cutoff for this resource than what's actually been included in the resource. It's quite remarkable. So we had 59 holes in this update, but we've already drilled 60 holes since the cutoff. We've received 11 of those 60 holes with some pretty superb results, which were in the announcement yesterday, and we'll go through them shortly too. So we're already planning the next update. So that's going to be planned for Q4 this year. We expect to have over 100 holes in the next JORC update. So 59 in this one, but the next one is incorporating nearly double the amount. So the other bit of news as well, which we have announced, is that we're planning to reopen the existing underground mine. Now, why is that significant? We have an underground mine. It's got 18 kilometres of existing development. Much of that is very accessible. There's a couple of areas which are flooded. Less than 10% of the mine has water in it. So you can go through it. We've got to bring that up to standard for the compliance with safety and make sure that our people are okay, and we can do drilling from underground. Now, drilling from underground, the holes are about half as long, so it's important for drill accuracy, but efficiencies, cost and time is also very important for helping to upgrade our resource. Our strategy has been to build and upgrade what we've currently got to underpin feasibility studies. In order to do that, we want to be able to upgrade not only just the inferred resource, but we've also got to get more indicated and measured. So those higher confidence categories under JORC. So that's the intent, and that's what we've also been able to achieve. And in this resource, we've put in 2 million tonnes in the measured category. All right, so Fabio, if you can jump through to the next slide, please. So this is our tonnes and grade curve. Now this is, I wouldn't say it's quite unique, but it's a good situation to have because it gives optionality for a future mine. So on a 1%, which is the like for like with the old resource. Now, when we did the old resource, the copper price was a bit over $3 a pound, and today it's about $4.60. But on a like for like basis, it was 1%. So we've reported on that for consistency. But as you can see, you drop down to 1.3, you get that 53% increase in tonnes. Now that's pretty significant. And a 32% increase in the amount of contained copper. So at 1% copper cutoff, there's 250,000 tonnes, but at 0.8, it's well over 300,000 tonnes. Next slide, please. So as I mentioned, this is a plan view map of the current resource. Now, later Fabio will show you how it's changed from the old to the new, but this is the new resource. Now, what you can see here is the existing underground mines in the black lines. You can see where the new portals are. Now, around us, there's a couple of old historic mines, which used to mine some very spectacular grades. You can see there's the Gesserman mine, there's the Daly mine, and then right down to the south, there's the Leatherwood mine. Now, these were all very high-grade deposits, and as you can see, there's no resource around any of those. They're very exciting targets for us, primarily due to quite spectacular grades that were historically mined. So some very good opportunities there. It's got the 2 portals which go in off the side of the hill, and they go in flat, effectively they go uphill a little bit, so the water still drains out. Now that's important because when we get into mining, that means that we're not trying to have to put a truck, going down a decline, which is very, very expensive. It consumes a lot more fuel. We can start using hybrid and battery equipment. So low emission mining of copper is essentially our goal, and I think we've got a really unique setup for that. The darker areas there you can see under the resource, they're in the measured category, and they're around the existing historic mine area. And a lot of those drives, you might have seen some photos historically from what we've put in presentations, but you can actually go up and you can touch the resource. You can actually go along and you can see where the copper is outcropping along the existing mines. So one of the reasons why we hadn't defined measured resources previously, or 2 of the reasons, one was we didn't have an accurate survey of some of these historic mined areas. So we've gone and done a latest technology, it's a LiDAR survey of the existing mine operations, and we've picked up some of these stopes. The other one was just a lack of drilling. We hadn't put in any of our own drilling. So we've gone now and put in existing drilling into some of these areas to confirm. And what that drilling's shown us is it's not only confirmed, but in some areas improved what we thought was already there too. So that's where we've been able to sort of define some measured resource. The plan will be to then we can go underground and drill from underground to further expand the existing inferred, to expand the resource, and then also to upgrade other areas as well. Next slide, please. So here's a comparison compared to our existing resource, 30% increase, 36% increase in the contained copper, and 39% increase in the tonnes. You can see we've now got that measured resource there as well. Next slide. So this slide here, it's got a lot of numbers on it, but this is showing that the top there's the new resource 2022 under the different categories. The second one, 2020 resource, So that was in December. And what you can see by those blue dots, blue boxes, 2.1 million tonnes now defined in the measured category. It's the first time under JORC for a measured resource, and an additional 4.8 million tonnes overall. So what does that? That adds up to about 67,000 tonnes of extra copper contained, which is pretty significant when you start thinking that the copper price is now over $10,000 a tonne if you do the maths on that. Next slide, please. So I might hand over to Fabio, who can, our chief geologist, done a lot of work on updating this resource with one of our other senior geologists here. The other point to make was that we did a lot of this work in-house, but we had it all peer-reviewed and verified by SRK, a very well-credentialed consultancy group.
Yep, thanks, Tim. And SRK also was involved in preparing the previous MRE, so they were quite familiar with the project as well already. So what I'll try to do, I'll try to show you visually how the resource has changed from December 2020 to March 2022. And the image you see there is an image of the mine area. In black, you have the underground developments out of the new drone survey. And also in the background, there is an image with some fancy colors, and that's a geophysical image showing you what we call the magnetic response of the rocks in the area. Why is that important? It's important because in the mine area, mineralization is often associated with a mineral called magnetite, and the mineral magnetite, as you can probably imagine from the name, is strongly magnetic, and that can be picked up by geophysical survey. So essentially what you see in the image there, where you have the warmer colors, the red and the violet, is where the survey is showing higher magnetic response, which clearly should show you that there is a higher likelihood of having a lot of magnetite. Now, the outline in blue is simply an outline of the magnetic response at a specific cutoff, at a specific value that we used previously also to define our exploration target back in 2020. And I put it there just as a reference for you when we see the following slides. So that's again the same outline in blue, and what you can see there is essentially the drill traces that we included, or the drilling that we included in the 2020 MRE update. Now, the 2020 MRE update essentially was the first MRE ever declared at the project under JORC, and contained only historical holes. So even if we started drilling a few months before the MRE, there was not enough information to actually update it. So we just use historical data. And as you can see there is a big cluster of holes in the north, reasonable cluster in the middle, but there's very, very little drilling in the south, in what we then defined and named the Talon area, which is actually where the vast majority of the drilling that we completed has been in the last 18 months. And also it's where a lot of the resource increase comes from. So if we switch to the new drilling that we included in the current MRE update, as you can see, there's a lot of drill holes down here in the Talon, and still significant gaps that we'll talk about later on in the eastern section, the southern section as well. And then a few drill holes, switch between the two. So that's the old one, that's the new one. There's also some drilling that we did in the main mine area, and Tim was mentioning before. Those were what we call the resource upgrade drilling, and they were designed essentially to verify the historical information and give us that confidence we needed to declare a measured resource. So if from the drilling, we actually look at the outline of the resource, this is the outline of the previous MRE. And as you can see, there is significant clusters in the north, in the central part of the mine, but there is very, very little down here. And that's primarily driven by the lack of drilling. So essentially, we did have good indication that there could have been extensions back then, but essentially because of the lack of drilling, we couldn't really put a resource around it. And if we look at the extent of the new MRE that we just released yesterday, as you can see, there's a lot more around the Talon, and especially around this western Talon area. which is where we can find the geological feature that we have named the wave. So essentially a bit of a special rock type that comes through into the sediments and gives us essentially a lot more mineralization than we were predicting. So that's quickly showing you in plan view the difference between two resources. And clearly what is also important to remember is that there's a lot of white areas here between these magnetic outline and the resource itself. And we consider all of them to be extremely prospective to expand the resource even further just in the near mine area. So this slide here tries to describe that concept. So essentially it's a bit crowded, but if you follow me, in green, it's the same magnetic outline that we were seeing before. In black, the underground developments that are already there. And then the resource shown with the warm colors. And let's start from the blue dots. So the blue dots are essentially those 60 holes that Tim was talking about before. So these are drill holes that we completed, but that did not make it into the current MRE. They're finished. We already have assays for 11 of them that have already been announced, and there's still 49 assays outstanding from these 60 holes. So that's clearly quite remarkable, as Tim was saying, because we are releasing an update based on 59 holes, and already we have 60 holes ready to go. We're just waiting for the assays to come back to us. And clearly, we're not really stopping. We continue drilling, and we will continue drilling up to the next sort of cutoff date. And we expect overall to have approximately 100 new holes in the next MRE update. So quite substantial, also compared to what we're releasing now. And in terms of expansion potential, there's a lot of circles here all around these white areas between the resource and the magnetic outline. And we consider them to be prime targets for expansion. So we believe, and some of them clearly more prospective than others, but we believe that especially in the south here, where the Talon area is sort of the western section here and the northern section, there is a lot of potential to simply extend the existing resource. And we'll see that in the next slide. I just want to touch briefly to what Tim was saying around the historical mines. Now, from the information we have, the historical mines used roughly a 2% copper cutoff, which is substantially higher than what we use now. So what we think is that there could be a lot of mineralization remnant there that was not mined historically, and possibly also additional mineralization that that was never discovered there. So the mining that was done back then in the early 1900s was all visual. They didn't do any drilling really before going in. So any blind mineralization essentially was totally missed. So I think the idea would be to reassess all these areas and see what potential there is, both in terms of remnant mineralization as well as previously undiscovered mineralization. Now, going back to the extension potential, we reviewed the two sections here that are named CC and BB, starting from the one in the south. So next slide. So as you can see, this is a section that's what we call Marble Peak, the mountain under which the mineralization is sitting. In orange is the outline of the third MRE. And then, as you can see here, we're trying to show the extension potential for that mineralization going east under the Leatherwood mine workings here. And there's also a couple of nicely planned holes ready to be drilled to test that extension. And looking at the next section, which is a north-south section through the main through the mine area in the north, where a lot of the historical developments are located. As you can see here, we have the outline of the resource. The colors are a bit different because we have measured resource here in the purple, and then indicated in the dark orange, and then a bit of inferred in the lighter orange. And again, we see potential to extend this lower level of these lower loads essentially to the north, sub-parallel to this contact here between the gray and the pale blue there. So clearly, potential to extend near the mine, but more importantly, I think, because in terms of scale potential, we do have incredible, we believe, potential to find additional mineralization in the near mine area. So essentially, Oracle Ridge This is a section that you probably remember for those of you that followed us for a long time, but it's a section that tries to explain the mineralization control the controls on the mineralization that we see in the area. I won't describe everything. I'll just point you to Oracle Ridge on the left-hand side. That's the same mountain that I was talking about before. That's where the portals are sitting roughly. And as you can see, there are these orange lodes that represent the mineralization that we have currently defined. And if you look carefully, they sit above this body here that are outlined in pink. Now that body there is a granite that we call leadwood. Essentially mineralization at the mine is sitting on top, above the granite up here. Now we have a project that sits about 2 kilometers to the east of the mine called Oryx, where we believe the geology is essentially mirrored. So instead of looking at the upper part of that contact, we're looking at the lower part of the contact. And that's where we think there's an incredible potential to find not only additional mineralization, but we believe we could actually find potentially, just based on the size, another Oracle Ridge tile. Now, this is a conceptual section, so it doesn't really, the scale is a bit off. But if I show you the next slide, an actual plan view. Now, on the left-hand side here, you have the outline of the MRE in orange. And on the right-hand side, there is this wiggly line here, which represents that leadwood contact as it comes to surface in the Oryx prospect. And highlighted in orange are some of the pretty interesting rock chip samples that were collected 18 months ago by our team of field mappers. So 6.64, 6.3, 8%, 8%, 6%, 10%, 8%, scattered all along the contact there. And essentially, we think the entire prospective area is about 3 kilometers long in an east-west direction, and maybe 1.5 in a north-south direction. So there is enough room there to discover another Oracle Ridge potentially, and maybe even two. So what we'll do is essentially we're actually waiting for the permit to be finalized. That should come fairly soon. And once that's done, we'll get the ground ready. We'll refurbish the existing roads that are there, and then we'll roll the rig in and start drilling and see what we can find. So in summary, I'll bring it over to Tim to finish it off.
Yeah, so just quickly, thanks, Fabio. We see this as a very, a significant increase in our resource based off just the number of holes that we've done. And it's a very good, next step towards feasibility studies and, hopefully, potentially, reopening the mine. As I said before, we plan to further increase the existing resource, upgrade the existing resource because you need the indicated measure to underpin those feasibility studies. But at the same time, we really like the blue sky potential. When you look at the comparisons of the other big major systems, we're in the right age rocks and we've got very, very similar geology to the other big major projects around us. And that's when you start talking in, the hundreds of millions to billions of tons. So very big scale projects. So we will keep looking at the sort of the blue sky and the projects like Oryx. As soon as we get those sorts of permits, we'll certainly move the rig onto those. So another next update planned for later this year, we'll have over 100 holes is planned. So look, that's the summary of it. I don't want to keep you any longer, so I'll hand you back to Jane, and if there's any questions for Fabio or myself, then there might be some there.
Wonderful, thank you for that. We encourage webinar attendees to send through questions via the Q&A function at the bottom of the screen as well. But we've had a few come through, so I'll jump into them. So the timing for the drilling at Oryx, if you were able to provide an update on that, that'd be great.
Yeah, so the drilling on Oryx, so there's different land claim types in Arizona, throughout the US as well, but we do need some permits from the other landowners, and that's from the forest group. So it's a little bit out of our hands. We have put in the permits and they've been very good to deal with. We would expect, by the timeline of how that's progressed in the coming weeks to hopefully not more than a month or two to be able to get those permits received. But we'll keep working with the landowners on that front.
Thanks, Tim. And the original resource was 12 million tonnes and repeated guidance was for an additional 14 to 29 million tonnes. So why, one of the webinar attendees has asked why it's not at least 26.
Or 26 million tonnes. Well, yeah, okay, that's a great question, actually. So you're right. So when we picked up the project, there was the Canadian resource, NI 43-101, and then we said on top of the existing, it was 11 million tonnes at that stage. There was another increase up to the 39 million tonnes overall in terms of resource. So we've now updated that. Now those numbers are still very, very real. You know, we still see that potential to be getting up to that 30 to 40 million tonnes of resource overall, and you know we're at that halfway there now. We're that 26 million tonnes. I think what the drilling that we've done is it's more than reinforcing it. It's really showing that resource exploration target is very, very real. Absolutely. So it's more than 26 million tonnes, that's for sure. Previously we stated it could be up to about 40 million tonnes.
Thank you. And there's just a question on the monthly burn rate and how much this is going to change as we start to focus on underground.
Yeah, so the monthly burn rate that you will see in the quarterly reports has been in the order of around about $6-7 million a quarter. Now, seeing that we've got so far in front of our drilling, we've been drilling at such a rate, and we're waiting on so many results now. So what we've done is we've parked up one rig for this period of time and diverted those funds to enable the underground to be re-established. So we're drilling with two. We've got plenty of news and plenty of results still to flow through. And then we'll bring on the third rig to reopen the underground. So we'll be back to the 3 rigs. Now, in terms of what does that mean for our monthly burn rate, is effectively we don't believe it's going to make much difference at all, because we're effectively just diverting the funds. And whilst we've still got this great big, effectively backlog of results still to come through.
Thank you, Tim. And this question's come up quite a few times, actually. So how much resource do you plan to define to underpin the feasibility studies?
Yeah, that is a good one. Look, it's interesting, actually. Copper price is obviously going really well. So some people just go, well, why don't you could kind of get going now? Like it would make sense. This project was last mined in the early to mid 90s. It finished in 96. They were mining 250 to 300,000 tonnes a year. Copper price at that time was $1 a pound. Obviously, costs and expenses have all gone up since that point. But you're right, there is that potential you could kind of get going, but that's not the value that we see. We want to grow this resource out so we can not be mining at 250, 300,000 tonne a year, but we could be mining this at a far greater rate. Maybe it's 1.5 to 2 million tonnes a year, or we've got to do the feasibility studies to do that. And if we can do that, we can get our unit costs right down. But it means we've got to grow our resource, so we've got 8 to 10 years at a pretty significant throughput per annum. That's essentially it. So at this stage, we're building out the resources, but we've still got that optionality that maybe you could just go and open up the mine, and you could just take it down to one of the local concentrators and make some money that way too. So where the copper price is, it's absolutely fabulous. This is great for our business, and in that it itself gives us more optionality too.
Thanks, Tim. There's just a question here on drill hole 19. Do you want to maybe just elaborate on that?
I can start off, and Fabio can add in anything as well. So, yeah, ODH 19 was an historic hole which was in the southern part of the Talon. Now we've got the hole. We've seen with the mineralisation and the core, and that was supporting mineralisation around the Talon. Now we've gone and drilled a number of holes. We haven't twinned it, which is essentially saying we replicate. We haven't done that, but we've drilled a number of holes around it, and unfortunately, it hasn't supported what was in that hole. So we've excluded that hole from the resource. But what is interesting is that we've actually got the hole. So we now believe that maybe one of the orientations was recorded wrong or something like that. But it's real. Like we know, we've seen the core, we've got the core, we can see it's quite well mineralised, and there's a number of intercepts in it. But unfortunately, the drilling that we've put around it hasn't supported it. But Fabio, you might have something else you'd like to add on that point.
Yeah, well, I think you just explained it really well, Tim. Essentially, we believe the drill hole is real. We just don't have the right either coordinates for the color location or the right survey. So we have some suspects on where it could be, but clearly we can't really guess and leave it into the resource. Now, in terms of what that means for the reliability of the resource and everything else, I think what we are demonstrating through the resource upgrade drilling that we've done in the main part of the mine is that each and every drill hole that we drill, let's say 90% of them, return similar, if not better, copper, silver, and gold grades than the surrounding holes. So if anything, we're actually improving the historical results. Plus, after 60 holes throughout the mine area, I don't think we've seen anywhere else any inconsistency like that. So I think that the likelihood of that happening again is very low based on the results that we have. And a side note, while we were tracing the mineralization of the H19, we did not find that mineralization, but we found plenty more at depth. So it was a bit of a surprise in a way, but we were able essentially to find more mineralization anyway at depth along the levelable contact. So it wasn't entirely a negative in a way discovering that. We were able, by chasing with the H19, to find additional mineralization that probably would have not yet drilled at this stage.
Thank you, Fabio. And I think we can all agree that the copper price is flying at the moment. So what's the view on pricing for the short, medium and long term?
Yeah, look, I think, everyone's got their opinions on this, and I'm always keen to hear everybody else's thoughts. Some of the observations that I see, the world's obviously screaming out for copper and other base metals with decarbonisation, and it's absolutely fundamental for the electric decarbonisation. But a lot of the big major copper projects, there's not that elasticity to be able to respond to the rising prices. They're big cutbacks. What's the incentive price of some of these projects? It's quite interesting, and I just when you drive through Arizona and you see what would be required for expanding some of these mills to start pumping through, a lot of it is really the lower grade. That there's not a great big, a lot of high grade copper resources sitting out there ready to be mined. So I think certainly in the short to medium term, there's some very strong fundamentals for these higher prices to continue. And you see what's going on over in Chile and Peru as well, where there's a lot of challenges over there from increasing state government royalties, water challenges as well for some of these great big projects. And that as well is a good differentiator for us. Because we're underground, we're small, we're relatively high grade. So we're seen quite favourably compared to some of those other projects. But look, I think in the short to medium term, there's some very strong copper prices that we're going to see. And short of finding any other major discoveries around the world, I think the long term is looking pretty rosy too.
Thank you for joining us today for the Eagle Mountain Investor Webinar. If we have missed any questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But we look forward to updating you again soon.
Thanks, Jane, and thanks all investors and potential future investors too.
Thank you.